G'day guys and welcome to the weekly VEMA Trader Market Scan. Today we're going to be running you through a cool new feature that was requested by users and we got into VEMA last week. The devs have been working hard on that one, so it's really cool to see that put in, and it ties in really well with these market scans, so we'll give you a little example of that. And then we'll go and take a look at Bitcoin for the week ahead, see if there's any trades that we like the look of, potentially set up some trades if there is, and yeah, we'll go from there. So what we'll do is we'll head to VEMA and we'll get started. Righto, so this is the trade that we set up 2 weeks ago, the short from the 61.8 fib on the 4 hour, and it was a trade that went really well. But if you watched last week's video, I spoke about how I moved the take profit up because the market just felt a bit more bullish than what I expected it to be, and so I wanted to lock in profits while they were there rather than shooting for big targets, potentially price not getting there and then copping a loss. So last week I spoke about how I'd made that comment in the journal: move take profit, price hit initial. Since then, our fantastic dev team has implemented one of the most requested user features, right, which was mid and post-trade tags. So tags in the monitoring screen and tags in the review screen. That's now there. So you can see I've got a tag box up the top. You'll also see it's been rearranged a little bit. So you now have details and journal. It just flows a little bit better this way. So in the journal, I can now add tags after the trade's taken place. So in this case, I moved my take profit and my initial was hit. By tagging that, I can now go and filter this data in the Analyze section. So I can see, okay, I am repeatedly moving my take profit and price constantly gets to my initial take profit. I really need to stop moving my take profit and just back myself in. Or I might constantly be tagging move take profit, moved well, and like price never reached initial, would have been stopped out. And I can see, okay, either I am moving my take profit too much and I should be leaving it, or I'm really good at managing my take profits and knowing when to move it. So by having post-trade tags, I can really crack into that data and get a really fine-tuned sense of how my managing trades is working. Same, you'll see I had moved stop loss too early. Now that doesn't apply on this trade, but it's handy to have that there so that I can analyze the data in the same way I was talking about with the move take profit. So that's what I wanted to show you guys this week. Now what I'll do is I'll head to the current Bitcoin chart and I'll see what's happening there. Alright, so here we are on Bitcoin now. On the weekly, there's really not a whole lot to look at. The two zones that are still in control are sort of that 63 and the 34, supply and demand zones. In terms of candlesticks, right, we have had a bullish engulfing in the last week, but the 2 weeks before it were pretty massive bear hammers. So it's really just a lot of chop, right? We've really gone bull hammer, right, evening star with this 3 candle formation, doji, maybe a very slight bull hammer, more of a doge than anything, 2 bear hammers, bullish engulfing. Just a lot of indecision, right? That's really all I'm seeing on the weekly. Nothing that gives me too much direction bias. The one thing that does give me a little bit of a directional bias is we're consolidating above support, which you'll often hear me say is, I shouldn't say typically, but it, I've seen a lot of consolidations above support break to the downside because it's sort of showing price is sitting there, but no one's really buying it up. It's also showing that people are buying it because it's not going through support, but you're not really seeing a change in the way the market's moving. It's really just sitting on that support, and often you'll see that lead to a break down. On the daily, again, I'm not seeing a whole lot that's changed from last week. We're really just still in that big bear flag, ascending wedge sort of formation. My daily bias is still bearish because a bear flag has a high probability of breaking to the downside, especially after such a big sell-off into it. And again, we haven't come back even to the 38 fib. So to me, it just looks like a really weak consolidation. I'd barely even call it a retracement after such a strong sell-off. And that makes me think, over the next, we're talking probably a couple of months, but over the next couple of months, a move to the downside is, definitely possible. I mean, everything's definitely possible. But yeah, to me, that feels like the high probability is a breakdown of this flag, head to the downside somewhere. And here we are on the 4 hour. So on the 4 hour, the good news is Bitcoin is looking better than last week, right? I said last week Bitcoin looked disgusting. I stand by it. It was gross. It's now starting to have a bit of structure. It's starting to move in a way that at least makes sense to me, right? What's disgusting to me might be exactly what you like to trade. This is much more how I like to see Bitcoin move. That said, I still don't really have any trades. The one, this supply zone held really well, but I wouldn't be shorting from that now. We've wicked halfway through it, and the trade would have been on the initial hit. So I think it was about a 2.5 to 1. There was a cheeky trade there, but I didn't set that up last week, so not going to claim it. Potentially there's a long from here, right? But it's counter trend. So it's not something that I am going to take this week. What I do like about this long is the fact that we made a higher high. So from this zone here, we pushed up above this high and made a higher high, and the fact that we have wicked up sort of halfway into the supply zone. What I don't like about this long is my daily time frame. My daily time frame bias is bearish, so I'm really not interested in getting into longs at the moment, and especially a long that's just a 2.5, right? If this had like, if I could get like a 4 to 1, then I'll potentially take the chance with 0.5% risk, because that's what I do if I'm counter trend trading with my higher time frame bias. I go from 1% to 0.5% risk, but at a 2.5 to 1, I just don't want to touch it. I just don't want to counter trend trade it, so I'm going to be staying out of this. In terms of looking for shorts, like I said, I'm not going to be taking a short from that supply zone because we have sort of gone a little bit of the way into it. I will set this up. So the only short that I'm really interested in right now, and this really goes back to my philosophy of maximum reward, minimum risk trading, which often leads to you selling big green candles, right? I only really want to be selling if price does bust through the zone and get up there, because then I'm selling sort of the top of this bear flag. So, if I'm thinking about what I'm seeing on the daily, I'm looking at this going, oh, if I can get into a short at the top of this bear flag, one, I can write it down to the bottom of the bear flag potentially, and two, if the bear flag breaks down, then I've got an entry up here on something that could go, who knows how far down. So I can just be sitting in a really, really nice position. So I'm quite happy to short from this sort of daily and 4 hour zone. Now, I don't really like the width of it. It's a pretty big zone, but all that means is my risk to reward is going to be dropped a little bit. I'm still going to end up with I'm going to have that about there. It's still above a 3 to 1, so I'm quite happy to get into that trade. So what I would be looking at there is a short. I'm going live. I want to bounce. I'm going to go 0% distance to activate. I'm almost tempted, so you can refine zones. That's what I've done here. I've got a 4 hour zone within my daily zone. I'm almost tempted to refine that even further, just because of the width of this. It'll potentially, there's potentially a 1 hour zone. In fact, let's do it. Because this is really the key of minimum risk, maximum reward trading, right? If I can really refine this, there's a good chance that it never gets picked up because it's so high up in the zone that price never gets there. But it's like if price gets there, like I am really happy to be selling this thing. Like picture anyone that sold Bitcoin at 65k or anywhere near the top. In fact, that I quite like the look of this, to be honest. Anyone who sold Bitcoin at 65k, right? A lot of people would have thought, oh, Bitcoin's still going to go up. You would be stoked if you cashed out at 65. I think it did get up to like 67, but you're not going to care about that when it's now down at 40, right? So this is sort of the crux of that. So let me cancel that because if you move a trigger while you're setting up a trade, it's not ideal. So we're going to go from alpha now. And people, like, if you're thinking, what's a 15-minute zone matter when you're looking at the 4 hour? I'll just show you guys. So that zone that we rejected off most recently, sorry, I'm jumping around a little bit here, but that zone we rejected off most recently, you'll see, right, if you refine your zones, so for me, that would be the 15-minute zone. And then if you come across to where price pierced that zone, it was exactly, perfectly rejected off that 15-minute zone. So refining your zones, I am a really, really big fan of. It allows you to get really good risk to rewards. Obviously, the higher up into the zone we're getting, the riskier that trade becomes to some extent because the zone has been pierced. But this is what I like to do, right? This minimum risk, maximum reward style of trading. So you'll see now, I'll have gone from a 3 to 1. In fact, we use the indicative entry because that'll do it for us. So direction is short, strategy is a bounce. No conditions. I'm quite happy to just sell once price gets to that point. Count risk percent is 1 because we're with my high time frame bias. Minimum risk reward 2 to 1, fantastic. So I'm going to use a fixed stop loss of 45468. 45468. And we will target, if we get up there, I only want to target sort of halfway through this. So 40687. 40687. So you can see we're now looking at a 6 to 1, right? And with the previous trade, I was actually targeting way further down. I was targeting down here somewhere. So, if I target down 39450, it's probably going to be like a 9 to 1 or something. Right? So an 8 to 1 basically. So you can see how just reducing your stop by that small amount can make a massive difference to your risk to reward. So let's put this back. We'll target where we are now. So 4,700 about. 4,007 will give a 50 on the end, so it's not just a big round number. I'm pretty happy with that. So yeah, about a 621. Now, the tags that I want. So I'm going to tag this with refined zone. Then I'm going to tag 4 hour 15 minute, because that's how I refined. Whoops, that was a 4 hour 15 minute refined. We also had daily bear flag with high time frame bias, which is one I've used a couple of times. Is there anything else? Not really. I don't think it's a fibs trade or anything like that. So I'm pretty happy. I'm going to leave my tags like that. For the notes, so we had a daily bear flag. Bear flag looking for min risk, max reward trade. Great opportunity if price gets there. Confidence in this one? Ooh, okay. So it's a daily bear flag, and I'm using a 15-minute zone to refine. So that is a pretty big stretch. But it's not something that I haven't seen happen before. So there's also the 4 hour zone. There's also a daily zone there. So I'm pretty confident in those zones holding, at least initially, whether we get this far down. I'd be surprised to see price rocket through there. What could happen is I get front run, right? Price never gets up into the 15 minute and it just rejects off the daily or the 4 hour. I mean, price may never even get up there. Price could just come back down from here, but I'm sort of picturing something like this, but it might only come up this far, or it could just rocket through. So I'm going to give this I'm feeling a 6. I'm feeling a 6. I don't think it's the worst thing to just go with your gut feeling when you're doing your confidence and your mood. I'm happy today. I'm a little bit tired, so I'm going to say I'm not very happy, but I'm definitely happy. I'm having a good day. But yeah, like just go with your gut feeling, because if you overthink it too much and you do this and you do that, I mean, you know, it'll still give you useful data for sure, but your first instinct is probably more of a constant metric, which is what you want. Like you want sort of some way to constantly keep that constant, I was about to say, but some way to sort of standardize the way that you measure your confidence. And so for me, my first instinct is a way to do that. You might also, you know, if you really do like getting into data and analytics, you might do up a rubric, right? And you might look at the rubric and say, okay, this and that, and so my confidence is this, you know, because that's what the rubric spits out. However you want to do it, for me, I just like my gut instinct, my first instinct, that's what I'm rolling with. So that is it. That is really the only trade that I am setting up on Bitcoin this week on the 4 hours. Yeah, that's pretty much it. So hopefully you guys enjoyed this video. You know, get out there, put your monitoring and your reviewing tags in, because they're going to be super, super useful for your data analysis if you do utilize that feature. And yeah, have a great day, happy trading, and I'll talk to you guys soon.